This is FinTech Insider News. This week, NatWest is buying Evelyn Partners to grow its wealth offering. Monzo, NatWest and HSBC have been publicly shamed for failing to refund fraud victims. And the world's most popular YouTuber, MrBeast, has bought a FinTech. We'll be tackling all of this and more on today's show, so don't go anywhere.
This episode is brought to you by Indeed. Stop waiting around for the perfect candidate. Instead, use Indeed sponsored jobs to find the right people with the right skills fast. It's a simple way to make sure your listing is the first candidates see. According to Indeed data, sponsored jobs have 4 times more applicants than non-sponsored jobs. So go build your dream team today with Indeed. Get a $75 sponsored job credit at Indeed.com/podcast. Terms and conditions apply.
Hello and welcome to episode 1038 of FinTech Insider News, brought to you by 11FS, the 5-time consultancy of the year that works with financial providers big and small to build the next generation of financial services. I'm Kate Moody, Customer Strategy Director at 11FS, and this week I've mostly been trying to escape from childcare commitments by going to Finovate Europe, which was a lot of fun. So lots of chat about AI, obviously, and lots of other things besides. So that was great. But glad to be back in the world of podcasting. So to help me unpack the biggest and most interesting stories from fintech and financial services from the past week, I'm joined by a brilliant panel of guests. First up, we have a welcome back to the show for Jess Cath, Managing Partner at Thistle Initiatives. Great to see you, Jess. How are you doing? How are things at Thistle?
I'm very, very well, thank you. And all good at Thistle, just very busy in terms of financial crime and compliance stuff.
I mean, I'm guessing that's pretty much always the case, right? But yeah, thank you very much for making the time to join us. Always great to have you on the show. Next up, we have another return to the podcast for Andy Russell, CEO of Project Arnauld at 11FS Holdings. Thanks for joining us, Andy. Again, maybe for people that haven't come across you on the show before, would you mind giving them a bit of context on yourself, Project Arnauld and 11FS Holdings, please?
Hi, Kate. Thanks for having me on. So Andy Russell, FinTech CEO, previously 10x UK robo-advisor Wealthify, before moving across to join the 11FS crew, where I'm building out Project Arnauld, which is a UK neo-private bank. We're going to be taking on the private banks and delivering new wealth services like the UK have never seen before.
Awesome. Fingers crossed. And last but not least, completing our lineup, we have a true FinTech Insider OG, Sam Maule, Head of Business Development at Moov. Sam, always great to have you back on the show. How are things going since you were last on the pod?
Oh, just OG. Yeah. That means very old grandfather. Everybody.
I mean, you said it, not me.
Kate,
So
I knew what the sarcasm was there. I'm doing good. I'm enjoying, not much happening in the US. It's really mellow over here. So, all the good stuff. Yeah.
All the good stuff. Well, thank you very much for taking time out from the chaos to join us. So we have a panel. Let's get on with the show. Our first story this week is, and it's covered in quite a few places, NatWest to buy wealth manager Evelyn Partners for £2.7 billion. NatWest Group has agreed to buy wealth manager Evelyn Partners for £2.7 billion, marking its largest acquisition since the 2008 financial crisis bailout. Evelyn Partners manages about £69 billion of client assets and offers financial planning, investment management, and the Best Invest platform. The deal, expected to complete in the summer of 2026, strengthens NatWest's private banking and wealth management offering alongside brands like Coutts. Combining Evelyn with NatWest's existing business will more than double its assets under management to around £127 billion. To secure the acquisition, NatWest outbid rival bidders, including Barclays. Andy, you've got, I suppose, probably the greatest wealth management expertise on the panel today, so I'll give you first shot at this one. What did you make of the move?
That's very kind of you, Kate. I thought it was very interesting to start off with. I think it shows that the wealth management market is very much a seller's market at the moment. To start off with, we've got NatWest acquiring Evelyn. Nuveen today announced they're acquiring Schroders. JPM Chase announced they're acquiring Wealth OS about a week or two ago. There's lots of movement in the M&A market. in what's quite a frothy market at the moment. We've got kind of financial markets across the world hitting record highs. It might have come off a little bit in the last week or two, but it's certainly a frothy market. So interesting to see that wealth is driving the space in the acquisition side. I guess positives, negatives from me. I think, as you've mentioned, on a positive side, it fills out the spectrum. If we were playing financial services monopoly, NatWest has just kind of gone down the right hand side of the board and acquired all the properties on the right hand side of the board, because you've got your NatWest investments online. You've kind of got your best invest for the D2C investors, which are kind of slightly higher pot sizes. You got Evelyn, which is IFAs, and then you got Coots at the top end. So kind of monopoly on the one side of the board, or bingo if that's your game of choice. I think the terms of 2.7 billion are proportionally in line with when Tilney bought Smith and Williamson's in the merger that created Evelyn in 2020. That literally is just proportioned up from that amount, reflecting the fact that they've grown since then. And I guess growth will be, as you said, it doubles NatWest's investment AUM. That'll tick a big KPI box in the NatWest boardrooms, I'm sure. Growing that much in one foul swoop will be a big KPI tick. I guess on the negative side for me, or the challenger side, should I say, felt a bit toppy. 15 times EBITDA. You're probably looking at somewhere between 10 and 15 in that market. So 15 is not the end of the world. They've got to hit about 60 million of savings per annum to bring it down from the 15 to the 10 that I think they've said they're going to aim to do. It creates a little bit of a mismatch in all the different propositions they have. Each of the ones I've just gone through are on different tech. They serve different customers. They've all got different price points. I've not seen a clear statement around how they're going to shape that up post-acquisition. And so as a result, it's not really clear to me what the customer serving strategy is post-strategy. It feels like a really good corporate KPI tick. We've doubled. But what does that mean for customers? I'm not sure. I've not seen anything yet on that.
Sam, what was your take on this one?
I find it really fascinating. Funny enough, little over 30 years ago, I started my career in banking in, Andy, ready for this? Wealth management. So Northern Trust, a big whitebird bank in the U.S. based out of Chicago, acquired a company that did DC and DB management. So 401k management and pension plan management. Believe it or not, we used to have pensions in the U.S. That tells you how old I am. Owned it for 10 years and ran it. And then, Andy, guess what they did?
Sold it.
Decided it wasn't core to their business and sold it to Hewitt Consulting. Yeah, so I've been down this path before, where you have a bank at the scale of Northern Trust, which is known as a whitebird, so very big on the high wealth side, and went lower market, right, with 401ks. I think that's like ISAs, if I remember right, in the UK, was along those lines. And after about a decade of running this, decided it wasn't a fit. I like NatWest. They were my bank when I lived in the UK. They were the reason I started coming to the UK. It was back when Royal Bank of Scotland and NatWest had that incredibly interesting merger. So I kind of get the philosophy behind it. You want to be sticky. You want the full life cycle, if you will, with your customers. How they execute, I think that's what's going to be interesting.
Yeah, absolutely.
Do you think that's a company out view of the world, though, that stickiness, Sam, rather than a customer?
Customers don't care, Andy.
Indeed.
I don't think customers care.
No, indeed. I've spoke to, as I'm setting up the private bank, I've spoke to a fair few customers across the wealth spectrum, and none of them have kind of said, what'd be really good is as I move from kind of 15 grand to 70 grand, if I could move tech, please, and have a slightly different proposition. Then when I get a 250 grand or £500,000, I'd like a slightly different. And they don't this is a I can see why there would be sensible rationale for NatWest to do this. I'm not really seeing the customer rationale.
I agree. I think we always kind of look at this like Alice in Wonderland, through the looking glass. We're on the one side. We are way too close to this. We think everybody cares about AI. Everybody cares about robo-advisors. Everybody cares about crypto. Come on. we're just too close to the flame. So yes, I do believe, I would agree with you, Andy. It makes sense for the company. If I'm a consumer, I'm like, yeah. That's very American. How's it for you, Kate?
Jess, I want to bring you on this one as well. What was it that most interested you about this piece of news?
Yeah, I thought this was very interesting because we do a lot of work in the kind of investment space, a lot of M&A stuff, and we are seeing a lot of activity in this market, which is really, really exciting and I think good for the consumer. But I think the main challenge here is, as Andy and both Sam have said, is the integration risk. Because on paper, this looks great, but what about the integration risk? And of course, we have talked a little bit about robo-advisors and new technology, but there are a lot of players that are starting to consolidate, which means there will be opportunities to enhance technology and look at new ways of doing things. But of course, there's going to be buckets of things to integrate and absolute nightmares that come along with that. So it's really going to be looking at that integration risk, how they go about executing that integration, and what they bring to the customer in terms of the experience, the systems, the tooling as well.
Yeah, for sure. I mean, and did you think Barclays are going to be pissed off that they missed out on this one? It's interesting, I suppose, that they were bidding as well, right?
Yeah, I think there was a couple in there. I think Barclays was the main one. I mean, it sounds like it all came down to price, and I guess NatWest outbid them. As I said, I think it feels toppy. It sounds like it was quite a competitive bid to get to that level. It doesn't seem like it was an overpay. It just seems like it was the top of a range, and they just must have outbid Barclays. But it's a frothy market at the moment, as I said earlier on. And what we mean by that is markets across the world are hitting lots of highs, which means the underlying customer pots are hitting multiple highs, which means the revenues on the backs of those are hitting multiple highs. So kind of having a price derived off very kind of historically high amounts means I would suspect that Evelyn have come out of this stronger than NatWest, and it was probably outside what Barclays wanted to pay.
No, I think that feels fair. I mean, Sam, we're just seeing just a constant lot of chat in the industry generally around the mass affluent. All of the big banks are talking about kind of trying to move into the space, serve these customers better. Obviously, I suppose the NatWest Holdings team are looking at this space as well. Are you seeing similar amounts of focus on this part of the market in the US?
Oh, yeah. I mean, in the US, we have a massive K-shaped economy, which I know y'all are well aware of. The wealth disparity over here is just increasing. We have a middle class that is just shrinking. And by the way, I am one of those believers that we aren't ready for the impact that's going to happen on jobs over here. The job market is shockingly tough over here, shockingly tough, and not for just entry level jobs. UPS just announced 30,000 cuts. The amount of cuts that Google and Amazon and others have done. You've got some very talented folks out there who have gone a year, 2 years plus without landing a role. So yeah, there's been this massive shift over into the high wealth side because that market's doing great, by the way. We had a fascinating quote yesterday by our Attorney General talking about the Epstein files and why we're not focused on the Dow being over 50,000, which has gotten so much ridicule over here because only about 36% of Americans are actually in the stock market. So it's a great vanity metric, and then you look at the majority of Americans and it doesn't impact them. So I'm not surprised whatsoever that there's been this great shift over on the high wealth side, because on the lower end, where's the money?
Yeah.
Yeah,
Not trying to be mean. Where's the money?
I think I think both in the US and the UK, you are getting that K-shaped kind of customer cohort where you're getting the high-end customers, the more affluent customers, who are probably riding the economic storm and difficulties more easily than the less affluent people, and so will have different customer needs, which kind of bringing it back to the NatWest deal. Your Coots and your high-end Evelyn customers are going to need something completely different to what your NatWest investing online and your Best Invest customers do. And I think, interestingly, I find in the wealth space that tech has unusually started bottom up. We've had some really good kind of tech developments in the robo space with Nutmeg, with Wealthify, with lots of players who are trying to solve for the kind of standardization to keep costs low to allow everybody to access the investment market. And if you can invest for 15, 20 years and you beat inflation, then you're better off generally than keeping it in savings that doesn't. So it's kind of giving lower affluent people access to the same tools that the higher affluent people do. But that doesn't mean that that's the only job that a high affluent person needs. We're looking at kind of things around, I've got a really complex financial and family and business lives, and I'm managing that across 30 different products across my family, across 20 different providers. The wealth I've created is really personal to me, and yet I'm giving it to somebody to invest in homogenized funds, or I'm investing in homogenized funds. Or I need help, and I want someone who's really good to help me. And the people I'm talking to are really good, but the tech that they've got underneath them's rubbish. And so I'm having to they're having to paper over the cracks. Those types of customer problems are completely different from the 10, 20 grand per year ISA customers. And in both the US and the UK, and it's interesting how the market has started to bifurcate. And it's even more interesting to then see that a company has then decided to try and bridge all of that.
And we'll have to wait and see how, as you said, they actually managed to execute it. Okay, well, moving us on to our next story. This one comes from The Guardian, and that is Monzo wrongly denied refunds to thousands of fraud and scam victims. The UK's financial ombudsman found Monzo had incorrectly denied 34% of escalated fraud complaints, one of the highest uphold rates in the sector, with NatWest and HSBC close behind. Fraud is now the most common crime in the UK, accounting for around 41% of offences in England and Wales. While overall APP fraud cases fell in 2024, criminals still stole £450 million, and only around £267 million was reimbursed. Monzo says many of the cases relate to historic fraud from more than 2 years ago, and that it has since invested heavily in fraud prevention technology. Jess, again, you're probably going to be the numero uno expert on this one, so let's start off with your take on this. What did you make of these figures?
Yeah, so 34% is not a great number, but I think we've got to put that into context, because obviously this is the number of escalated cases that have gone up to the Financial Ombudsman Service. So it's not 34% of all their cases, but this is the cases that are strong enough for customers to then raise with the Financial Ombudsman Service. So they're the escalated cases that have gone up. So it's a high number of escalated cases that the FOS has determined that actually they haven't reimbursed correctly. So that is a very high number, which of course could point to a couple of different things. It could point to them making inconsistent decisions. It could point to them looking at interpreting the reimbursement rules that came out not too long ago incorrectly, or maybe getting the burden of proof slightly wrong in terms of putting too much of that burden on the customer and therefore not reimbursing. But it doesn't paint an ideal picture. But then on the flip side, we have to again put this into even more context, that Monzo seems to be at the forefront of this, but we can see that NatWest and HSBC, very traditional players, are not far behind. So whilst Monzo gets the headline, ultimately we've got a number of the incumbent banks also with challenges and high numbers. And again, some of these linked to historic cases, which again, Monzo's absolutely right. There are still some challenges here. I think though, where they raised that this is linked to historic cases, we can see in the market that since the tightening of the APP fraud rules and the launch of the reimbursement requirements back in 2024, we've suddenly seen everyone scrambling to treat fraud like they already treat AML. So up until this point, fraud has kind of been seen as the annoying younger brother to AML. So everyone had really strong anti-money laundering controls. And then we had these fraud requirements come into place. And suddenly everyone's putting in new technology, better monitoring, and much stronger frameworks. So when we're talking about historic cases, Monzo is right to say that actually they have made improvements, and in the same with NatWest and other banks as well. But ultimately, this is still a high number. And it's not just a problem that's related to Monzo, it's a problem that's related to incumbent banks as well.
No, I think that's really important to call out. Sam, do you think Monzo are getting a slightly harsh coverage here?
Yeah, I think it's an easy brand to go after. I get asked a lot by younger people who are moving into the industry what space they should be in. And, it's easy. Follow Jessica's example. Fraud, it's there is so much work in job security in combating this. It is amazing. I am old enough to remember what it was like in the US when 9/11 happened and the mad scramble we did around AML, right? The kickoff for this, and it's a good push for that. And the reality is, with what's taking place through technology and AI, it's kind of a mini 9/11 moment. Meaning the attacks that we're seeing, the sheer volume that is taking place is staggering. In the U.S., you look at Zelle, you look at P2P, and you look at the impact to people. And, we don't have as great a tools to combat these, meaning the CFPB here has been extremely weakened. From a consumer standpoint. So I think this is a space that we are going to be looking at incredibly hard over the next 5 to 10 years. And the good news is, Jessica, correct me if I'm wrong, we can use the same tools that we're getting hit with to combat it. So we're seeing companies like Sardine, Alloy in the US really skyrocket in valuation because of this. So I am encouraged on that side. But yeah, I think Monzo's getting a slightly raw deal on this. I think it's easy to write a story about Monzo.
Yeah. Andy, obviously, you're building a new business, right? So and you've built businesses in the past. So how you're having to incorporate fraud and fraud prevention different now to maybe businesses you've been
partner
in the
really,
past?
really well. So Middesk, Secure, Sardine are all partners of Moov, or a money movement company in the US. So fraud has to be front and center. AML is front and center. OFAC is front. Compliance is front and center. So how are we handling this, Kate? Our compliance officer is a 20-year OCC veteran who wrote all the regs. That's fun, everybody. That's fun. Let me tell you. Well, that's a shout out to Kimberly Hebb, but oh my God. But that's how you do that. You take it seriously from the initial build.
Yeah. Andy, what's your take?
Yeah, the only bit I'd add to that is I completely agree with Sam. You need people that have been around the block, that have seen lots of these things before, that can understand what works and what doesn't work. You need new, fresh blood in there to kind of combat the new ideas that the fraudsters are coming up with. But ultimately, I guess, to answer your original question, Kate, around what's changed. Technology's changed. There's money in fraud, and whatever there's money in fraud, which there will always be, criminals are going to get better at tech to be able to get more money. And so companies need to continue to invest in as much as the fraudsters are investing in it to keep up with them. I guess the thing that I've seen develop in the last few years is a willingness to hunt in packs. As the providers, a company on their own doing AML checks and suspicious transaction monitoring is great, especially if they've got the old guard and the new guard in the team that can do all these great checks. It's never going to be as strong as 5 companies doing that, or 10 companies that all speak to each other, learn from each other, and work out what's just happened in one place and can we prevent it happening in one of the other places. Because these fraudsters will try it on one place and they'll see what's successful and what it isn't. And the successful stuff they'll try elsewhere. And so you see it going around the market a lot more. And so I've seen a willingness, I think we could do a lot more of it, but I've seen a willingness development in the last, say, 2 years or so, where there's a lot more talking in the community. The experts are getting together a lot more and they're sharing a lot more data to help prevent this as they hunt in packs.
Just to come back on that, though, there's a couple of things. So one thing that Sam said is absolutely critical, that financial crime and compliance frameworks are seen as an enabler for new businesses, particularly if you're looking to scale, grow, and then go on to sell that business. It has to be in place and it has to be strong, because that's the only way you're going to enable business growth. And then to Andy's point around the industry coming together to actually share information and talk and collaborate more closely, I would challenge that slightly, because financial crime professionals have been doing that for a long time. But of course, the regulatory frameworks around privacy and around data sharing have been quite stifling. And we've come up against a lot of kind of legal challenges. And there's often been a lot of conversations between financial crime and compliance and your legal teams in order to figure out what you can and cannot share, because of course, that's very, very important. But customers want to have the perfect fraud prevention technology, but then they also want to have ultimate privacy. And this is fundamentally at odds. And ultimately, if we do want to be successful at challenging fraudsters that are constantly changing their methodologies, constantly deploying new technologies, we do need to look at pushing the boundaries in terms of sharing things between firms. Now, we do have better regulatory frameworks now, and we are starting to be able to do that more. But there are certainly a few more things that we need to work on in terms of coming together to share that information. But we are seeing more and more good things come out of the frameworks and the regulators, because they know that we have to.
Yeah, I've got something from a U.S. perspective that I think Andy, Jessica, Kate, you'll enjoy. We had this event called the Super Bowl, which we think is so cool, yet Man City Liverpool had a bigger viewing audience, but we'll leave that alone. But the Super Bowl took place last week, and one of the commercials, the biggest thing about the Super Bowl is the commercials that are on. One of the commercials was by the makers of the Ring doorbell. And what the commercial was about was how they have a new feature that if you lose your dog, the Ring doorbell can do recognition of the dog and find it and report it back. And they've already rescued like hundreds of dogs using this feature. They thought it was the coolest commercial ever. The uproar in the U.S. around a surveillance tool without permissions exploded. So there's this balance of technology and customer rights that is fascinating, that we keep. It's an onion, right? We keep peeling and going, this is incredible. Oh, wait a minute. So it's this balance that you have to have. But honestly, there's your news story for next week, Kate. Look at Ring doorbell, lost dogs. And
that's my weekend sorted. Yeah. Absolutely.
Oh, I'm here for that and MrBeast, Kate. Between those two, go on YouTube, go crazy.
I mean, yeah, I feel like we could probably talk about this for the entire rest of the show, right? Because as you say, there's so many complexities to this. I suppose, Jess, just I suppose give our listeners a little bit of a practical end to this story. You know, if someone does think their bank has rejected a scam claim unfairly, what do you think they should do next? If a decision is unfair, what advice would you give people?
Yeah. So first things first is to ask them to make sure that decision's in writing. So we need to understand, why, what's the reason for refusal. You can then, of course, formally complain to the bank. It goes through their complaints process. And then, of course, if it's unresolved from there, you can go to the Financial Ombudsman Service. The FOS are actually free, independent, and very sympathetic to fraud victims. So if it does go across to them, it's highly likely they will rule in your favour. It is a long process, but most claims that we see that go through there do rule in the customer's favour.
Okay, so good to know. Awesome. Well, we're going to take a quick pause here. We'll be back very shortly.
Hey folks, David Breer here, CEO of 11FS. Here's something you might not know about me. I get a lot of people trying to impersonate me online, fake profiles, scam emails, the lot. And a big part of that comes from data brokers, hundreds of them, quietly collecting and selling your personal information. Your phone number, email, home address, job title, all out there and all fueling identity theft, scam calls, and spam. If you've ever searched your own name online, hands up, who hasn't? You'll know how exposed you really are. That's why we've partnered with Incogni. They contact 230 plus data brokers and tell them to delete your information properly and legally under GDPR and CCPA. Doing it yourself would take hundreds of hours. Incogni automates the whole thing and keeps working with repeat removal requests if your data reappears. I tried it, and within days, saw brokers deleting my data. You can even protect your family members too. Fintech Insider listeners get 60% off an annual plan. Just head to incogni.com/fintechinsider and use code FintechInsider. And yes, it's risk-free with a 30-day money-back guarantee. You'll find the link in the description.
This episode is brought to you by Redfin. You're listening to a podcast, which means you're probably multitasking. Maybe even scrolling home listings on Redfin, saving homes without expecting to get them. But Redfin isn't just built for endless browsing. It's built to help you find and own a home. With agents who close twice as many deals, when you find the one, you've got a real shot at getting it. Get started at redfin.com. Own the dream.
Now, a quick break from the headlines to tell you about our latest Insights podcast. Last year, the UK regulator, the FCA, launched its AI Sandbox, a first-of-its-kind program designed to help firms build and test AI in a safe, controlled environment before releasing tools to the public. So we headed down to the FCA's London office, mics in hand, to hear directly from the regulator and from companies who've taken part about what they built and what they've learned. It's out now. Just scroll to the episode below this one in your feed. Back to the news. And our next story is MrBeast's company buys Gen Z-focused fintech app Step. We took this story from TechCrunch, but people getting excited about it in lots of places. Step, which has so far raised around $500 million, has built a base of 7 million Gen Z users and offers tools to help young people build credit, save, and invest. The app already had high-profile backers, including Stripe, General Catalyst, and celebrity investors like Charli D'Amelio and Steph Curry. Commenting on the deal, MrBeast, real name Jimmy Donaldson, said he wants to give young people the financial education and foundation he never had. Sam, you got on LinkedIn and wrote about this one. So what's your take on it?
Well, first I have to ask, of the three of you, how many actually had heard of MrBeast before this happened? Kate.
I've got a 14-year-old boy, so like, I can't get away from it.
Yeah, I've got a 20-year-old son, so he's basically been his target audience for years. I always find it fascinating how many people on LinkedIn have wrote about this, and I guarantee you they'd never heard or watched one of his videos prior to posting on how this was either going to work or not work. I find MrBeast and his company to be a fascinating case study on what marketing has moved into and what it's become, and what an audience and a culture is, and a community is in a digital age. And I think he's probably one of the greatest examples of this. Jimmy Donaldson, that's his name. He has captured what marketing is like, and this is a weird reference, but Gary Vaynerchuk, way back when social media and Twitter was first flying up the handle, Gary Vaynerchuk wrote a bunch of books. We've actually interviewed him for 11FS, Kate, back in the day. And he really captured what Twitter and TikTok and everything else was going to be. MrBeast has figured out the video side of this. I normally think these celebrity-backed fintechs are god-awful. We had the Kardashian card in the US. What a disaster that was. I can sit here and rattle off as many celebrity-backed fintechs that have been absolute disasters in the US. It would combat Forbes doing the 30 under 30. Oh my God, it's the same type of approach. This time, I actually am encouraged by it. He has incredible distribution. His daily views average around between 100 million to 140 million per day with his audience. That dwarfs cable TV in the US, cable news, even sports. An NBA game or a baseball or NFL game, you're lucky if you get 60 million views. So that's not on his massive viral things. That's just content that he has. He knows how to market it. So he started this chocolate company called Feastables that he didn't just market it from his YouTube channels. He wove it into his content, and it became a thing and took off. This is a distribution play, and this is a data play. He now has transaction data for his customer base. Come on, that's what we all want, right? We want that SKU level data. That's what Amazon and Walmart have, and that's what the banks, by the way, don't have, the SKU level data. So he's positioned himself extremely well on this. Gets back to execution. Every single time it gets back to execution and how much focus he's going to put on it. But based on his track record, I think this one's going to be interesting. I really do.
Andy, obviously, your son's watching MrBeast. Do you think he's going to be nagging you to... I mean, obviously, Step is currently only in the US, right? But you'll be... If he moves to the UK, do you think your son will be nagging you to sign him up?
When I go home or downstairs, as it now I'm working from home, in an evening, if I talk about finances, everybody's like eyes in my family glaze over. So he probably won't be annoying me about the financial side of it. It'll just get me to try and watch some more of his videos. I think this is a really good move as well. For all the things you said, the data is the key one as well. You've got that many people in your audience to understand where they're spending their cash is going to be priceless, because then you can really focus your marketing activity in your videos. If you look at the company itself, like, it's got a lot of kind of altruistic elements to Step. It's trying to improve financial literacy, which is generally rubbish everywhere. It's giving prepaid cards and not allowing people to go into overdrafts. You can spend what you have. Really good, important lesson to learn. It's giving saving rates at about 3%, which is just a little bit less than what the US central bank are paying, which is really good, high, sustainable rates. It's giving cash back on some of the spend as well. So it's kind of helping improve people's wealth. All of that, it sounds like a really good customer proposition. The bit that kind of left me was, well, how do you make money from it then? People make money from either the kind of the spread on the savings, or the interchange fees on the spend, or the overdraft. Quite a lot of financial organizations make money on overdraft fees or late payment fees. I think Step's business model is that they make money on the interchange fees, but interchange fees are quite low. It's not. You said earlier on it's raised 500 million quid. That's because it needs to break even. It needs scale when it's only earning like 20 bips, like 0.2 of 1% on every transaction. It needs money to get to scale to be able to break even. Actually, what you got here is MrBeast going, like, that's great. I want to do something that's altruistic, but actually, I'm paying for the data because it's going to help me make money over here. So it just seems like a really sensible strategic link up.
Jess, what's your view? You feeling super excited about this one, or can you see any potential pitfalls?
I think I might have been living under a rock, because this is one of the first times I've actually heard about MrBeast. But looking into and reading the stories, I'm coming at this from a financial crime and compliance perspective. And ultimately, when you have content creators or celebrities that are trying to do something in a heavily regulated space, it usually goes wrong. But looking at this, he seems to be coming at it with the right motivations. That ultimately, if you're trying to target a younger customer base, you need to have consumer protection at the forefront of your mind. So really have that kind of education focus, which from an initial view of MrBeast, it looks like he is going at it in the right way, and he's coming at it from a kind of educational perspective. But it'd be interesting to see how they make sure that the interface remains clear, simple, and how they focus on educating younger people through that interface and take them through that journey to make sure that the product, as they start to monetize it further, to Andy's point about how does it monetize, you've still got that focus around consumer protection, particularly targeting those younger markets.
Jess, I've got a follow-up question that's kind of focused around the younger elements of financial crime. What I'm seeing in the UK is like pre-18 years old. The onboarding journey is very different between banks in the UK. Some use parents, some go direct to customers of pre-18-year-olds. Some just say no. I'm fascinated. It's going to be something that, family money is a family lived thing. We spend it as a family, and then like one person generally in the family gets the delegated the job of managing it. But that pre-18 onboarding from an AML perspective, it still seems quite clunky. certainly in the UK. I just wondered, like, where's your view of where that's heading?
It's vastly different depending on the product set and the firm's own risk appetite. It's vastly different. And we see lots of different firms approaching things in either a super cautious way, where they just don't offer services to younger customers, which again doesn't really address the need for education and to bring people into the financial system. So I see it happen. I mean, it's completely and utterly different between different firms, and not many of them have got it right. But as we move forward, a lot of these kind of prepaid card products or products that are really targeting the younger market, separate to junior ISAs and those kind of things, it's going to be really interesting to see how they build out that journey, because you still need to have parental oversight and protections, and all of that still needs to be very, very clear in terms of the onboarding, but also the ongoing monitoring of how that card is then used. And again, Andy, to your point, there are many things that need to be done at onboarding, but it's almost more important to be looking at that ongoing journey after that, to look at what are the thresholds that are applied, depending on age, on how they're using the card, what the product is. That's absolutely critical, as well as the onboarding flow.
Yeah, what I would say on this, Kate, two things to really watch. One, again, I love going on LinkedIn and reading people that have no clue what they're writing. He didn't buy a bank. It's not a bank. It is not a bank. The bank behind this is Evolve Bank. That's the same bank that was behind Synapse. That's the same bank that got hacked by Russians and majorly had a massive data breach. It's the same bank that the former president of the FDIC had, Juliana McWilliams, had to go in and basically do a massive investigation on and come up with how are these people getting their money back in the Synapse debacle. So bear that in mind. The bank behind this, Evolve Bank, who I know is trying to put controls in place and do things. I'm not slamming them, just going to state the obvious. There's been some issues. The second part of this that I would state is MrBeast and the team at Step have a company they can look at for success and how to do this in the US, and that's Greenlight. If you're familiar with Greenlight, they will tell you they have 6.5 million customers. Step will say it has 7 million. I tend to believe Greenlight more than Step, because I have 4 kids and I have grandkids and I'm in this space and I know how many people use Greenlight. I couldn't tell you people that use Step. So I'm not sure about that 7 million as a vanity metric or not. But Greenlight is profitable. It's done incredibly well. I think its last valuation was about $2.5 billion and very well run. So there is a roadmap and a path for them to follow. The huge benefit here is banks have distribution, banks have customers, fintech have tech. MrBeast has, oh my God, distribution and customers and an audience. So his customer acquisition costs, when you look at this and marketing and distribution, is incredible. He's going to find out what a regulator is, though, probably very soon, wrapped around this. So step carefully, Jimmy, Step carefully. And give me a call. I'm happy to consult, from a nominal fee.
I'm sure he'll be delighted to hear it. Okay, well, we'll keep our eyes peeled and watch how that one unfolds. But yeah, absolutely an exciting move. Okay, our final main story this week is AI personal banking assistant Cleo relaunches in the UK. We took this one from FinExtra. AI financial assistant Cleo is returning to the UK after having been active in the US since 2022. Cleo provides AI-powered financial insights on spending, budgeting, and saving, offering personalised financial coaching based on users' questions. Barney Hussey-Yeo, founder and CEO of Cleo, said, "Cleo started life right here in the UK, so coming back feels like a homecoming. The US gave us a scale to grow, but returning to the UK has always been part of the bigger picture. This is just the beginning of that next chapter." Coupled with this announcement is Cleo's launch of Autopilot, a smart automated money partner which uses AI to help you act on your goals automatically rather than just telling you what you should do. Jess, why do you think Cleo's coming back at this point in time?
So I think this is quite an exciting one. Obviously not because the UK market is actually in a bit of a downturn. There's lots of cost of living challenges, financial anxiety, and that's probably why they're moving back. But it does have quite a nice kind of humorous approach. So way of doing things with, I think they've got the kind of roast mode and the hype mode. It just adds a little playfulness to dealing with finances and managing finances. So from a personal perspective, I think at the moment when we're looking at the cost of living crisis and probably all the reasons why they're coming back, because of course that's a good opportunity, at least it's humorous and it's quite a nice and interesting product. So that's my initial view.
Sam, obviously it's interesting to have this kind of flip, right? Normally we're talking on the show often about like UK or European companies that are trying to break the US. And we've kind of got a UK-based company that ditched the UK and has been relatively successful in the US and is now coming back. So yeah, what can you see from that story? What does it tell you about them as an organization?
Yeah, it's one of the rare ones, right? Usually when you come into the U.S., these companies struggle. They've done well. I think like over 8 million customers. And I actually do know people that use Cleo in this case. I think their ARR is really, really strong from my right. Well, north of 200 million, if I remember right. They're going to have to modify that humor model a little bit of difference between UK humor and US humor. They might have to like up their game a little bit. But no, I love this move, right? This move, a US invasion. I'll take it, right? So I'll be very curious to see how this goes over. I'm hoping they have success. There's been some minor stories about them, and they got fined, I think, like 17 million, if I remember right, on the typical trying to end your subscription is incredibly painful. Yeah, shocker. Nobody does that, right, guys? Nobody makes it hard for you to cancel your subscription. So they did get fined for that and some of the things they did around cash advances. But overall, I think that's good company, good product. I'm really wishing them success in the UK.
I wouldn't mention a US-UK invasion too near your president. Near your president, Sam.
We're too busy with Venezuela and Canada and Greenland, so you guys are okay.
Yeah, I mean, obviously, we've got a couple of people we know who work at Cleo, so maybe I have to sort of try and buy them a coffee and see if I can extract some intel. But I'd be interested to see if like their return to the UK is in part driven, I suppose, by things like the AI sandbox. Obviously, they've got the tech and now they've kind of got the environment to kind of maybe try and get some of these AI-driven journeys sort of authorized and regulated. And also, we've got the announcement of targeted support coming in the UK as well, which is kind of where companies with the right licenses are going to be able to offer sort of quasi advice to sort of cohorts of customers with common characteristics. So I would be interested to see if something like Autopilot, if Cleo go down the route of looking for that sort of license, could start to kind of really go even further, not just sort of giving people sort of analysis on how much they should save each month, but actually starting to direct them into different products and things like that as well. So yeah, I think it's potentially, everything you're saying, Andy, I absolutely agree with you. I think they've got sort of a fantastic sort of proposition, and the sort of underlying tech puts them in a position to potentially execute completely different customer journeys and things that probably lots of people sat at incumbent traditional banks just look at and go like, damn, I wish we could do that. So I think it could be a really interesting time. I know it's new. I suppose we think of the likes of NatWest and HSBC and things like that as the incumbents, but I suppose also now like Monzo and Starling potentially even look like incumbents versus Cleo, and it will be interesting, especially from that brand perspective, because as we've been saying, their brand is so different, and in a market where it's hard to differentiate in many ways, like actually someone who's got the balls to actually go out and be a bit risky with their brand and use humor and use things. You might actually have even people at Monzo and Starling thinking like, oh, like maybe they'll do slightly more ambitious things than even we would.
Yeah, I completely agree. I think this is step one. It's compared to what we've had for the last 10 years, using AI to kind of autopilot your finances seems quite a big step, but it's step one. If you think about where we're going to be in 5 years' time or 10 years' time, we're going to be in a completely different place. Using a technology that's relatively new to us. It's only really a year or two old in terms of common usage. How it's going to be used in 5 years to provide support across all the ranges of the wealth spectrum is just going to be fascinating to see how it develops. And I think having like a company like Cleo, who is clearly driving the agenda, that is your new incumbent. people who are using technology in a new way to do new cool stuff is kind of my definition of the opposite of incumbents.
Yeah. And again, it's funny because there's an author in the U.S. called Mark Twain. We do have writers, everybody. Just give
We've
us some
heard of
credit.
Mark Twain, Sam. We've heard of
Okay,
Mark Twain.
just making sure. He said, history doesn't repeat itself, but it rhymes. This concept of humor and finances isn't new, because when I was working in the UK way back around 2006, I remember right, do you guys remember the egg card? The credit card egg? It was, oh my God. Great example, Kate. The egg card, go back and look at the branding and the humor that they used on their websites and through their marketing and everything else. It was 100% wrapped around British humor. And it had some success in market. So isn't new, has a rhyme to it. Wish them success.
Absolutely. Okay. Well, on that note, we're going to take a quick pause. We'll be back shortly. Okay, now for a quick look at one more story that we don't have time to cover in full. We took this from Fintech magazine. Visa launches Visa and Main to champion small businesses. The US platform is designed to help small businesses access capital, customers, and digital tools. It bundles Visa's financing, fraud mitigation, and customer acquisition tools into a single hub aimed at local entrepreneurs. A key component is a $100 million working capital facility in partnership with community lender Lendistry, targeting undercapitalized businesses. Visa is also using its sponsorship muscle, including the FIFA World Cup 2026, to help small businesses tap into high-profile events and drive footfall. We spend a lot of time on the podcast and at LendFest more broadly talking about how hard it is to be a small business, and also how SaaS platforms are increasingly critical in the day-to-day running of those businesses. So as a strategic move, I can see why Visa is looking to step into this space. I suppose when you look at the component parts of the platform, then like the optimistic part of my brain feels like they're heading in the right direction. So access to capital, support with marketing, and support with the adoption of digital tools. These are probably the top three things that we hear as consistent pain points for this audience all around the world. But I think the partnership with Lendistry is potentially great news. It's always great to see minority-led fintechs getting more prominence. I'm slightly underwhelmed by the initial offering in the Connect sort of marketing space. Maybe there's more to it on the platform itself, but from what I can see, mainly it just talks about free point of sale stickers. And I think small business owners are probably looking for something a bit more impactful than that. But I will hold my judgment. Maybe there's more that I'm not seeing in that space. But kudos to Visa for trying to step up for small businesses. And finally, this week, South Korean crypto firm accidentally pays out $40 billion in Bitcoin. This was covered on the BBC. Bithumb meant to reward customers with the equivalent of about $1.37. Instead, they accidentally sent 2,000 Bitcoin to each affected user, briefly handing out over $40 billion in crypto. Trading was frozen within 35 minutes, and the firm says it recovered 99.7% of the funds, but not before 695 customers became very temporary multi-millionaires. Jess, what are your takes? What's your take on this?
I mean, this is a classic case of human error, classic operations control failure. But this is insane in such a short period of time and such a big amount. I mean, it'd be wild if I saw that ending up in my account.
I just wonder how often people check. I don't know if would people have got like a push notification? Would people do these people check their wallets all the time? I don't actually have any insights to how many people would have noticed. Imagine if you just hadn't noticed.
No, I thought it was quite a. I don't quite get how the control if I tried to send 40 billion from my current account, that there'd be flashing alarms that wouldn't allow me to do it. There's clearly a control. Jess, you love this part of my brain that's thinking at the moment. There must be a control part of the system that's missing that says you don't have 40 billion pounds, mate. You can't send that much.
Exactly.
Yeah, you should 100% look up the story of Citi and Revlon and $1 billion mistake that was made. Talk about controls. There's another one for you to look into. $1 billion mistake by pushing the wrong button.
I think.
It's a bad hangover, isn't it? Really.
Oh gosh, yeah. I like these stories because they make me feel better about the many things that I've messed up in my life. But when you look at the detail behind, you can kind of start to see how it happens. So I think the initial reward was meant to be the equivalent of 2,000 won in Korean currency. So obviously they've just got the currency the wrong way, like the wrong currency. But yeah, again, like I don't know, like were those things in the same drop down box? Like that to me just seems crazy as well. Like I don't know, Jess, if you were consulting to these people, what advice would you give them?
I mean, ultimately, this is both a human side and the system side. So there's going to be something in the system that was wrong here. The drop-down box, something simple like that. But also, whatever happened to the classic four eyes check when you're making such large transfers? So there we go. Sometimes it's the simple ones that are the best.
And affected customers are apparently getting £10 each in compensation. Does that feel fair? Sam, would you be placated if you had your Bitcoin taken away, but they gave you 10? I don't even know what £10 is in dollars nowadays. I've lost track.
I don't know what £10 is in Bitcoin these days. Yeah, you know, it is what it is. Take the money and run, or the Bitcoin and run. Or
it'd be quite humorous if they actually got that bit wrong as well, and you end up with 10 billion as a compensatory apology.
Oh, that would be the greatest story ever.
If you make two mistakes, do you still have to give it back? Because I assume, like, if you send one amount in error, obviously it sounds like you have to give the money back. But if you sent it twice in error, like, at what point can you as a customer just keep the money?
Once you've changed your login details, and you can't I don't think they've got it all back yet. They haven't. They've only got like 97% back or something.
99.7%. So like 0.03% of it's outstanding.
But of 40 billion, that's quite. Someone sat there with a big like grin on their face right now that's just legged it across to Barbados or something.
I hope so.
Well, we wish them all the best. Okay, well, thank you so much to today's guests. Where can people find out a bit more about you and your companies, Andy?
11fsholdings.com to find out more about Project Arnauld and myself on LinkedIn.
How about you, Jess?
It's Jessica Cath on LinkedIn and thistleinitiatives.co.uk.
Awesome. And what about you, Sam?
Moov, Moov.io, and LinkedIn, usually.
And as for me, you can also find me on LinkedIn, Kate Moody, or you can drop me on kate@11fs.com. That wraps up today's episode. Thank you so much for listening to today's show. If you like what you heard, please make sure to follow us on your favourite podcast platform of choice. And if you really like what you've heard, why not share the podcast with a colleague or friend? As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or email podcast@11fs.com. Thanks again, and goodbye.